What is up, YouTube? This is the Working Investor. In this video, I'm going to talk about what's going on in my portfolio. I know I've been making some videos about hedging because I got my behind handed to me the past week. So has the entire market, and I'm sure a lot of you are feeling it. And the biggest thing that I need to learn is hedging, because even when it comes to income funds, it's not just about going for the income, it's also going for a well-balanced hedge. And like a lot of people, I want my portfolio to reflect the intelligence, what I have with investing and trying to fix a boat that's leaking. So I'm going to be completely honest with you. Nothing here is financial advice, legal advice, tax advice, or any form of advice. Like always, this is only for fun and entertainment purposes only. Please see all my disclaimers, and please make you take your own risk when you make your own investment decisions, and please speak to all your advisors. So right now we're going to talk about the options, and we'll go right into the stocks. So right now I have a call. My biggest position is YMAX. So I'm just selling one call for $12. I made $30 credit, and if I sell it for a little bit of loss, I sell it for a loss because YMAX is more than $12. And I picked up some shares on drip for like $11.98. So I'm just making a little money while, I'm kind of shorting it a little bit. Put, I kind of got, I was kind of running a little bit of the wheel, and then the market took a tank. So I just been rolling it out for a credit on TQQQ. That was just a random thing. And then I have IBIT. So IBIT is basically my crypto holding. So basically, it's a leap option on the spot price of Bitcoin via IBIT. So if you go down to the bottom, you'll see IBIT 50 call. I have 250 calls, and I think I spend around $21.50 each. And I'm pretty much betting that in December 17th, 2027, sometime between now and then, Bitcoin will go up, and I will profit and it's basically like having leverage because I'm paying a fraction of the price. I'm paying if it's $21.50, I'm paying $2,150 to control a $5,000 position times two because it's two calls. So it's more than like 2x leverage if you think about it on the upside. And then on the top where you see the IBIT 72 call, I am selling shorter dated, kind of making a poor man cover call. So I am selling some short calls against it at my cost basis or a little bit above my cost basis. This way, while I have basically short theta, paying me for my long theta, counterbalancing it. And I started a position today. I actually scalped it initially in Shield, SHLD. It's basically a defense ETF. And the government spends a lot of money on defense, and it has like Palantir and a lot of defensive technology. And it's pretty much been going up the entire year and since inception, pretty hefty. So I'm basically betting long-term, the next 5 months, it's going to go up. So I spent $440 for this contract. I sold it for $460. I made $20, and then I sold it, and then I bought it again for $440. So I just been, I could scalp it every day, or if I can hold it, do whatever I want with it. Let's get into the stocks. So YMAX is my biggest holding, whether you like it or not. That's where I'm at. Basically, I'm using the dividends for the next few weeks, and I'm using it. You're going to see at the end. I'm buying hedges. I don't just make videos, I actually research and practice what I preach. So I am trying to build out some hedges with the proceeds of YMAX. And then I have AIPI. So I initially had single stock holding with Misty and single stock holding with NVIDIA. And I did not want to have single stock risk. When I sold my Misty, I used the proceeds of Misty and put it into LFGY. So I still have Bitcoin exposure, but it's more hedged out because YieldMax does, they do collars, they do some, there is some hedging inside of the ETF itself, which could help. And then I used the proceeds, so that was the proceeds of Misty. And then I used the proceeds of NVIDIA, and I put it into AIPI, which I already had a sizable position, and I also put into GPTY. So I'm basically, if you look at the holdings of AIPI and GPTY, usually one of the highest weighted holding is NVIDIA. So I'm still exposed to NVIDIA, but now that I have a official, you know, taxable event, well, a tax write-off pretty much. I have right now official loss that I can write off in taxes, but I'm still exposed to the same sector, still making pretty good dividends, and they have a lower margin maintenance, and I'm not in the single stock. So that's the reason why they're so big. And then I have RDTE, which of course small cap gets affected first. So I'm kind of in it for now. I have it on drip. I have all of these on drip except for YMAX, which is off drip, and I'm right now divesting it out a little bit. And then I have SPY, which has done pretty well, and I have that on drip, like I said. T-SPY, not too bad. And I made a video comparing T-SPY to SPY to XDTE to SDTY, and I showed that SPY on the recovery day got most of the recovery. Got more recovery than all the other ones. So that's kudos to Neos. So here you can see a small position XDTE, a little bit of SDTY. Sometimes I'm happy with it, sometimes I'm not. We'll see. Now here are some of my hedges. So I have some CLOs. So I have CLOZ, 100 shares. Right now I'm not looking to increase it more. I'm just letting it drip into itself. YGLD, I made a video on it. It's basically 1.5x leverage on gold via futures. And they also do put credit spreads on equities on the major indices as well. So it's kind of like a bit of a mix of, put credit spreads on equity, but also like long gold. And it's been doing pretty decent. It's been doing somewhat of a hedge. I made a video that gold has a 0.08 correlation coefficient to the S&P 500, so it should be, and quite certainly to the Nasdaq. It's supposed to be a decent hedge. BIZD, which it's not really a hedge. I wouldn't consider it a hedge. It's basically an ETF of business development companies. It's basically a diversification tactic, but it's very correlated to the market. Some studies show like 0.8 correlation coefficient to the market. So I would not consider this a hedge. Initially, I thought maybe it could be a good hedge. It's more of a diversifier. And then I have IYRI, which is a Neos product. This is basically a real estate ETF, and they do cover calls on them. And then PCMM is just a tiny little nibble tester position. That's just another CLO ETF. And then I picked up a couple shares in CTA. Again, these are all using proceeds of option premium and using proceeds of dividends. No new money coming in. So that's managed futures through Simplify. And I also have CEFS. Basically, it's from Saba. It's basically a fund of funds of closed-end funds, and they try to buy it at a discount to the NAV. So it's more of a CEFS. CTA is considered a decent hedge. CEFS is more like a diversifier, not really a hedge. But it's a diversifier with some growth potential. Some of the stuff that are in closed-end funds, because when you say closed-end funds, it's like saying ETFs, you know what I mean? It's just they're closed-end, but it depends what's in them. So in CEFS, they hold a whole bunch of stuff. One of the stuff they hold is a gold closed-end fund. They hold all kinds of different, fixed income and then equities. And so it's a whole basket of baskets in there. And it's just trying to buy them at a discount for the investors. We could do a deep dive if you guys want into this. But so this is one of my, diversifiers, I would say. Now, I did mention that I have basically a growth account. It says 2 accounts. It's really 1 account. 1 account is nothing. And I call it my triple alpha hedge. So this is just pretty much a pure growth play, almost a pure growth play. And I'm using triple leverage products, and I'm hedging it with hedges as well and diversifiers as well to give me a better, risk adjusted return. And I do strategic rebalancing. When I say strategic rebalancing, I mean I try to sell high one asset and I have an uncorrelated asset where I will use the proceeds and buy low. So I constantly try to sell high, buy low, not strategic rebalancing where you sell low and sell low. In a taxable account, I guess you could do sell low and then, and then for a loss, and then you can move it over to a correlated asset and have a tax write-off. Not an accountant, but just something you want to talk to your accountant about. So you can see for today, I'm up 0.9%, and there's triple leverage products in there, and one of them is triple leverage gold. And just to compare it to the overall market, it's not too bad. I think these are futures. So let me look at the equities. So some of the, so you could see here the NASDAQ is up 0.57. So 0.9 is beating the NASDAQ. 0.9 is underperforming the Russell 2000, the RUT. 0.9 is beating the S&P, the SPX. So it's better than the SPX today, better than the NASDAQ. Not as good as the Russell, but there is hedges involved in my portfolio. You could see that the VIX is down today because it's been an update in the market. It's been doing better than TLT, and of course gold is down. So let's look at the holding. And last time I showed you like approximate holding, I'm going to show you more specific holdings of my triple leverage alpha. Again, very risky, so be advised. So my number one holding is VOO. You can see it's 43%. And then I have my three leverage products. I have SHNY, think of shiny, triple leverage gold. And that's they're all around close to 13%. Berkshire Hathaway, BRKU, which is 2x leverage of Berkshire Hathaway. So that's about, around the same percentage. And then TQQQ is the other triple leverage. So TQQQ and SHNY are triple leveraged, and Berkshire Hathaway, BRKU is double leveraged. So I'm basically saying that I think in the long run, over the next 20-ish years, I think gold is going to go up, whether because of inflation or whatever you want to call it. And if it goes up, I get to enjoy 3 times the amount that it goes up, approximately. It doesn't always. There's something called volatility drag. I have a whole video for that. And Berkshire Hathaway is deep value companies. So I'm basically saying that I think Berkshire Hathaway over the next couple decades is going to go up. So let me get 2 times the momentum up. TQQQ is triple leverage NASDAQ. So I'm kind of saying I'm betting heavy on the NASDAQ, saying it's going to go up a lot. But I know that you can really get whipsawed with it. So a lot of times like today, you'll see that gold is down. So my SHNY was down, but BRKU and TQQQ were up. So I have a very, very specific dollar amount I put for each of these. And I sold $300 today off TQQQ, and I sold $300 off today of BRKU. And I didn't buy any SHNY because SHNY was overweighted the other day. And even though I took off money off SHNY, it was still close to the key position, as you can see, as 12.81%. So I keep it in cash for a rainy day when one of them goes further down. As you can see, I have CTA, which is the commodities. BIZD, again, that's more of a diversifier. CEFS is a diversifier. I kind of tinkered a little bit. I snipped off the BIZD. I wasn't too happy that it's not a great hedge. And I put some into CEFS, kind of like, it's kind of like a lateral move, not really like a diversification move. It's more of a diversification move, but not a hedge. CLOZ, as you can see, I have it in my Robinhood as well. And here you could see the NEOS, 2% is real, well, it's actually 4% real estate because I have 2% in IYRI and 2% in USRT. So I'm not even betting everything into one real estate fund. I have spread out that 4% between 2 different real estate ETFs, REIT ETFs. And you could see here FSCO, that's another CLO. VXUS, just a small, what's 1% of the portfolio is, international, a little bit international. That is a bit of a diversifier. And then I have, some cash sitting in, government products. And then I have IBIT, just a tiny little bit of IBIT, just a tiny little bit. So that's my triple leverage alpha hedge position. So you could see that it's triple leverage products, but there are some hedges, if you add them up, it comes out to a decent amount of the portfolio. Of course, the bread and butter of it, 43% of it is just VOO, just your simple, boring VOO. This is a growth ETF for long-term growth, with some strategic rebalancing with the triple leverage products. Yeah, let me know what you guys think. Again, this is just my journey. I do realize, hindsight's 2020, and I am trying to grow as an investor. And I feel like it's not just the income, it's also the growth. I was talking to a friend of mine today, and we are talking about like how much income does somebody need, because income is a taxable event when you get dividends. So we were talking about maybe, just have enough income that you need to cover your lifestyle, but anything above that, maybe to have that in growth, because then you could decide when you want to, take profit. You decide when you want to cause a taxable event. Maybe you can cause a long-term capital gains if you hold it over a year, in a day or so. Again, speak to an accountant, but sometimes it may not be so beneficial that everything just be income. So there could be a mix. Of course, the income is very important, because the income could give you some financial freedom and some peace to cover the bills. And then after that, maybe some growth. But, everybody has their own style. Anyways, this is the Working Investor over and out. I hope you guys have a wonderful trading day. All the best. Be well.